Can you hear me now, Schwark?
Yes, I can. Can you hear me?
Yes, great. So, folks, my name is Krishnan. On behalf of IIT Madras Alumni Association, I'm very happy to invite Schwark Satyavolu today to give us a talk. I'm of course doubly delighted because Schwark is a batchmate and hostelmate, Godabite, and of course Silicon Valley is a topic of great interest to all of us here in India. So, without further ado, Schwark, over to you. Please enthrall us.
Well, thank you very much for that kind intro, Krishnan. I think very glad to be here, and I know this is a little bit of a Q&A type format that's possible here. So what I thought would be most interesting is for you guys to tell me the kinds of things you want to hear about, and I can appropriately tailor what I speak about based off of what is of most interest to people that are on the call. So please use the questions. There's a questions tool on the left there. Please go ahead and type up anything that you want me to kind of cover or speak about. So what I'm going to do is kind of kick off by just kind of sharing my thoughts on where Silicon Valley is today. I might give you a little bit of, even though the topic is present and future, I thought it might be a little bit of context to kind of talk a little bit about the past as well, and kind of give you the evolution of Silicon Valley and how things are actually changing here and what's actually happening here. But in the meanwhile, if you can put in your questions, then I will spend the rest of my time kind of making sure I address the kinds of things that are most interesting to you all. Nobody can actually speak, so please use the questions tool to actually start sending in what it is that you want me to cover. With that, my name is Schwartz Satyavolu. I'm a batch of 96 Meki. Went to Godav, and then moved into computer science when I got here for my master's. Spent time as an engineer, and then basically a year out of college, I actually started my first company. Ultimately took that thing public many years later, and then started a second company. I sold that to MasterCard, and I spent a couple of years at MasterCard, and then also spent some time at LifeLock as an executive of a public company before I kind of came into venture capital. So I'm a general partner at Trinity Ventures, which is a early stage venture firm. We're a $400 million fund, investing out of Fund 12, primarily focused on Series A and Series B. And we're primarily a US focused fund, so we don't actually do a lot of stuff internationally. And I focus primarily on fintech, security, and AI. Those are kind of like the general areas that I'm most focused in on. So I got my start in Silicon Valley. You can tell from my bio is like, back in 98, 99. So this was back in the Web 1.0 days. And I was fortunate enough to start the company in the first bubble, and actually even more fortunate to actually have raised a round before the bubble burst. So when the bubble burst, I actually lived through the first bubble burst of the 2000s. And funnily enough, I actually started my second company in 2007, just before the 2008 bubble burst. So I seem to have a habit of doing stuff like that. So I've actually ended up building and running companies through all of those things. And so my perspective on Silicon Valley is probably best encapsulated by a story from when I started my first company, Yodlee. I was up in Seattle working for Microsoft at the time, and I loved Seattle. It was a great outdoorsy town, and I had insisted to my co-founders that we start the company in Seattle back in 98, I think it was. And my co-founder basically said to me, you should come to Silicon Valley. By the way, he wasn't based in Silicon Valley either. He was based in San Diego. So we were all going to go to Silicon Valley to start this company. And I said, why? Like, we should just do it in Seattle. He said, why don't you come for a weekend to Silicon Valley and see if you can see if you still feel like we should start this in Seattle, and if you do, we'll come back and do it. So we went to Silicon Valley, we looked for space, we raised some angel money while we were there. And I have to tell you that after like 3 or 4 days that I spent in Silicon Valley, I came back convinced that it really should be a company that we start in Silicon Valley. And the reason was, the entire environment was electrifying, in that not only were there a bunch of investors, which is always nice to have, but really what was amazing was that the people in Silicon Valley were all falling over one another to try and work for the next big startup. So in Seattle, I had to convince people to work for a startup at all. Like, they were sitting there thinking, hey, I'm working for a Microsoft, or back then Real Networks, which happened to the other big employer. And why should I come work for a small startup? And in Silicon Valley, I didn't have to convince people to work for a startup. I just had to convince them to work for my startup. And that's a completely different thing. And then, of course, there was a substantial amount of capital that was available, but given the number of people that were out there funding companies in that area. Now, I think those are the couple of things that I believe kind of made Silicon Valley back then, and I think is the core of what makes Silicon Valley today. And in a lot of ways, I actually think that's the core of what will make Silicon Valley tomorrow as well. And so if you think about, what the more recent, what does the present look like in Silicon Valley, I'd say that it reminds me most of the frenetic amount of activity that we saw in 1999 before the last bubble burst. I'm not saying we're going to have another bubble burst in the near future, though that's not an unreasonable prediction to make. But the amount of capital, the amount of energy, and the amount of entrepreneurship, and the amount of companies being started is probably at those levels that were there back then. That said, there are some fundamental differences from back in 99 and today, which is there is a fundamental change in how companies are being built today. The cost of starting a company has plummeted. When I started my first company, I spent probably $2 to $3 million just to get a web page up on the internet. It took a lot of effort. We had to buy data centers, we had to buy servers, we had to rack them, we had to do a whole bunch of stuff just to get a web page on the internet. Today, you can get it done for 10 cents. In fact, you could actually build an entire web application for probably a couple of dollars, given the amount of open source infrastructure that's there. So the cost of entry, and therefore the cost of actually getting something done, has plummeted. And what that has meant is that there are companies that go to market without raising any money at all. So you can put an app in market and not actually raise any money at all, which was never possible in the past. So clearly there's going to be a more volume of stuff that's actually happening at the ground level. But the other thing that's ended up happening is the public markets for some time were actually unattractive, and therefore the large majority of growing companies actually ended up staying private longer and longer and longer. So the typical market cap of a company going public might have been $1 billion, or sometimes even 500 million, or somewhere in that range back in those days. Today, you see, folks like the Ubers of the world that are actually staying private all the way up to like 20 or 30 billion. And so you actually have companies staying private much, much longer and raising lots and lots more money in the private markets. And that changes a lot of dynamics. So for example, there are mega funds like SoftBank that have been created to power this last stage of growth that was not really ever required in the past, because it was actually primarily driven off of the public markets. So now you actually have these private investors that are starting to drive a lot of that growth well into the tens of billions of valuation in the private markets. And which in turn has basically meant, as you kind of have a trickle back down effect at our level, you actually see companies that are raising bigger and bigger rounds because it's actually costing more to run the business. In fact, it's actually the costs are plummeting. but because they know that they're actually trying to build bigger and bigger businesses while still staying private. So that's actually become a big area where I think it's become much more compelling in terms of finding ways to build companies and ways to succeed, if you may. In terms of sectors, I'd say that the most interesting areas, Silicon Valley has always been somewhat kind of thematic. There's always a theme of a certain kind of things, kind of taking capturing the imagination of venture capital, and so lots and lots of money flows into small, areas of innovation. So one of the things that's interesting is, right now, I'd say that there is a lot of focus on financial services. There's a lot of focus on SaaS, taking companies and picking up small pieces of everything that's happening inside the enterprise and putting it out as an individual application. I would tell you that 10 years ago, if you built any of these companies, I would tell you it's too small of a market, it's not interesting, and you could never build a company there. Today, it's quite the reverse. It's you can build massive billion-dollar companies doing very, very small slivers of something that a corporation does. And so we have a very successful company called Outreach that is doing sales automation, which simply does the ability to kind of programmatically contact your sales leads on a regular basis with a certain cadence of communications. And that's a relatively well-defined element, but that's a massively explosive market today, because the sales organizations that used to run as what I'll call processless organizations in a lot of ways, with maybe the exception of having some kind of a CRM or a Salesforce-like system, today are relatively algorithmic. Like, software development has evolved to become relatively well-developed on how software is developed. Sales has become a lot more well-developed in terms of processes and roles and so on and so forth. And so there's these SDRs and so on and so forth, and sales qualification of leads and lead generation infrastructure. So every one of those simple pieces is now bucketed and actually is creating large companies. So in terms of opportunities, I'd say all of those kinds of things are creating big opportunities. As I said, fintech is creating massive opportunities, not just in the US, but all over the world, as faster moving folks are actually breaking down the entire financial services system and kind of reinventing it. Some by helping existing providers kind of get better, and others by kind of reinventing some of those providers. So from all of those standpoints, it's actually become a relatively interesting area to look at. Transportation, I'd say broadly, and that spans everything from scooters all the way up to drones, is an area that there's a lot of innovation going on. There are some timing issues because technology is not quite ready to kind of deliver all the promises of the stuff. So it is likely that might actually end up with a little bit of a lull before it takes off again. But I do believe that transportation will be a big area of innovation that Silicon Valley is going to drive. On that note, it might be worth mentioning that one of the trends that I have observed in the very recent past, which is never really happened in the past, is if you look at the vast majority of innovation in most of the world, it's actually kind of generated in Silicon Valley. So a lot of things actually happen in Silicon Valley first, and then get replicated into Europe, into Asia, into Latin America, and a bunch of other places. One of the more recent phenomenon is where innovations, primarily in China, are being replicated here and trying to kind of create almost like a reverse flow of ideas. Now, unfortunately, I have to say that those have been generally not very good successes. And that's partially because of the same reason why not every Silicon Valley innovation can actually be replicated in other countries also, which is there are cultural and elemental differences of how societies operate that are not transferable. And so it's actually doesn't kind of translate one-on-one. So for example, there was the big bike boom in China created a whole flurry of activity around bikes in the US, but unfortunately the US roads are not really amenable to kind of create a good biking experience. So then they moved to electric bikes to try and alleviate that issue. That didn't quite work either. But then they stumbled on the construct of scooters, which actually is more interesting in the US, and which actually has a real chance of actually working in the US and taking off. And now the scooters are actually moving into other geographies as a potential innovation that can be moved up. Now, one of the other things I'll tell you is that the level of innovation has also changed in terms of the spectrum of things that are innovated upon. Back when Silicon Valley was created, Silicon Valley was creating silicon. Like it was creating transistors and creating the fundamental building blocks of innovation, if you may. I think we've built a lot of building blocks of innovation today, to the point where building software is like building Lego blocks. So today's innovation is a lot more at the topmost layers of actually delivering value to workers and increasing their efficiencies more than almost anything else. So I think the kind of innovation that you're seeing the most amount of investment in today is very different than it used to be in the old days. In fact, a lot of the fundamental innovation, like in AI, for example, is actually being done in research labs of the large corporations like the Googles and the IBMs and the Microsofts, and in nonprofits like OpenAI, which are then putting out these building blocks and saying, hey, here's some building blocks that you all can use. And then the rest of the innovation industry kind of jumps in and throws in a bunch of more stuff into it. So that's kind of what my perspective of what's going on in the industry today. As we go forward, I actually see Silicon Valley being less and less over the next 50 years the center of innovation, because I think the capital and the entrepreneurial nature of people is in fact spreading. More people are getting entrepreneurial all over the world, and definitely all over the US. And so I do see incredibly interesting companies. So today, for example, if I had to go back and make that Yodlee decision all over again of starting Yodlee in Seattle or in San Francisco, I probably wouldn't move to San Francisco, because Seattle is actually a vibrant enough economy now from an entrepreneurial standpoint to actually start companies, primarily because there's plenty of Amazon talent that's coming out, Google talent that's coming out. There's like well-trained talent that is both equipped and understanding of what it takes to build startups that is happening. I also feel like ultimately we are driving towards more and more automation. So I do think that is going to be the trend that's going to drive a lot of changes. In fact, if you look at a lot of what's happening in fintech, it's happening because technology companies are coming in and actually taking out a lot of the human intervention required to run large financial services operations. I do think that blockchain, while it's a primarily hype-driven system today, will be the foundation of interesting new innovations over the next 20 years. Very similar to what happened with the dot-com boom in the late 90s. Most of what happened in the late 90s was fluff and died. But, of course, companies like Amazon kind of survived from that first bubble. But really, everything that you can think of today, whether it's online banking, Airbnb, or Uber, or whatever else you can think of today, is built on the foundation of the internet that was very rapidly created and adopted back in the 90s. And so I think the hype cycle that we just went through on all the blockchain crypto stuff is definitely something that will ultimately die off, but the foundational infrastructures that got created and that were more broadly adopted, I think, will be interesting foundations of innovation as we move forward. And I do think the mega rounds and companies staying private for very, very long is probably a trend line that is likely to stay. But at the same time, a lot of those are driven by more economic factors than I think startup factors, in that the rate of return of risk-free capital, which basically means the Fed interest rates, have been so abysmally low that it has made it more interesting to get into higher risk asset classes for the people that actually have all the big money, like the big endowments and so on and so forth, which basically means that pre-IPO or higher risk companies actually have a lot of bigger pools of capital to go after. sovereign wealth funds are also deploying lots of capital. So there's some economic factors that are actually causing these companies to stay private longer. Those kinds of things, I think, will fundamentally evolve and change as the interest rates go up and the rates of return start to get a little bit more balanced in terms of all the options that are out there. So I'll stop there and just kind of start looking at some of what you guys want me to talk about, and I will cover some of these. So looks like somebody did ask about blockchain. So I hope that was they asked how is the blockchain going to get to the main street was the question. And my take on it, as I mentioned, is blockchain got to the main street already because your uncle now owns Bitcoin most likely, and that basically is the way that things get to main street. Once they are in that realm where they actually all know what Bitcoin is, whether they bought it or not, is how you get familiarized with that construct. That's how we all got familiarized with the internet. There was this .com boom, and we bought shares in these companies. And then whether or not you use the internet, you still kind of knew about the internet. And so you were more likely to use it when things actually came out using that platform. So I've made one investment in a company called Tori, which actually doesn't really tout the blockchain. They're not trying to tell the consumer, hey, this is built on the blockchain. But what they're really doing is issuing tickets on the blockchain, which are digitally native assets. So tickets actually really don't have any real physical form in any real sense. They can be validated, issued, and live on the blockchain. So I'm a big proponent that basically digitally native assets that can either be born, live, and die on the blockchain are the most interesting things that will actually get created companies around. So Tori is one of my investments for that reason. And I kind of feel like that's a very interesting area. Another question was around, how I see the Valley currently in comparison to 05. I'd say that the Valley today is a lot more vibrant than in 05, primarily because, as I said, the number of companies getting started, number of people on the entrepreneurial track is probably many multiples of what it used to be in 05 because of the cost of entry becoming lower and lower and lower every day. And so you can start companies, you can get them seed funded. The number of seed funds has gone up 5x, I believe, probably even more since in the 10 years. But in just like the last 3 or 4 years, I think it went up like 3 or 4x. So it's a pretty massive multiplication of seed funds, which actually makes it a lot easier to get companies started. It's not as easy, by the way, to keep them funded as you grow, but just to get started. So I'd say the entrepreneurial culture is probably very vibrant compared to 05 and getting better every day. The other topic that came up is AI, the state of AI in the Valley, and how about the comparative differences between AI in Asia and the US. Now, this is the one area where I actually worry a little bit about US domination. The reason is AI has really two components to it. One is algorithmic, which I think the US probably still has the upper hand in terms of the amount of talent that it attracts in order to be able to kind of innovate on the algorithmic aspects of AI. But the second aspect of AI is curation and data, which is basically making sure that A, you have a large amount of data, and B, that you actually have a large amount of data that's somewhat annotated or curated in some way that it can then be used to teach these algorithmic systems. And that latter aspect is where I believe Asia has a couple of advantages, particularly China. A, that they have ridiculous amounts of data. B, they can generate ridiculously larger amounts of data because of state control of the entire infrastructure. So there's cameras literally everywhere generating, probably terabytes of data every minute. And then they have a very, very large labor force that is very, very cost effective to actually make that data usable. And so even if you have a worse algorithm, you can actually end up creating just a smarter model to actually interpret certain things. So I do think that certain kinds of areas like that there are some advantages. Now, if you even look at things around DNA and genetic research, they because of looser ethics laws in Asia, they are making more progress, though it's not clear to me that that's how I'd like to see humanity progress. But there are certain kinds of things that are systemic about particularly China that I think can put China in a better place in certain areas. Now, what's interesting is that the research in the US, therefore, has actually started to move more towards how do I actually do it with less trained data, because generating data is an easier step than curating data. And so if you can actually algorithmically solve for that, which is unsupervised learning, for example, you actually end up creating interesting elements of how you can actually build that model. So I do have some hope for the US yet, but it is much more challenging of a market than it used to be. The other question or topic was around AR, and it says MR. I don't know what quite MR is, but the constructs around AR and VR, I'd say, are again in that what I'll call the trough of disappointment part of the cycle. So there's been a lot of what do you call innovation that was hyped up and oversold in a lot of ways. And so when the actual applications came out, there's probably been a lot more disappointment than not. That said, it's not because the technologies are not great. I believe they will be, just like blockchain or even transportation, there'll be a hype cycle that'll get a lot of innovation to come in. There'll be a trough of disappointment where nothing gets delivered. By the way, AI went through the exact same model 10 years ago when AI was the big thing. Everybody thought AI is going to change everything. And then they realized, well, it's not quite working just yet. But in the last 10 years, the compute cycles, in fact, there was probably another hype cycle of AI probably back in the 80s, where it was even more hyped probably than any time before after that. And again, did not deliver anything. But simply the algorithms might have been interesting, but the compute power wasn't quite there to kind of do things at scale. Today, we have compute and algorithms quite at the point where they can actually start to deliver some results. I would say that even today, it's being oversold. But there are specific aspects that can, in fact, kind of see some real results in AI. And AR is, again, in a similar state, where there are specific kinds of applications which I think could be interesting. I think Pokemon is like the poster child of a great application, which is well within the realm of what it can do relatively well today with the compute and hardware that's in everybody's hands. But it's not quite at the point where it can actually truly kind of make the kinds of impacts that everything else can. I think the place where those things will actually make an impact first is on the industrial level. Before they get to the consumer level. So you will see people, for example, training doctors and so on and so forth with, AR and VR tools. And those kinds of things are more likely to become normalized and used first, because just simply the power of the hardware that's necessary today to truly do a great job is large enough and big enough that it's unwieldy to kind of truly bring to the consumer scale. But people are still trying. I mean, the HoloLens and the VRFS that Facebook is doing and so on, they're all trying to work off of it and say, how do I fit the experiences into low-res displays and the low-power computing power that a consumer can afford? But if you have a very high-res display and a high-power computer, you can actually still do very interesting things even today. So the other question was around raising capital in the US for other areas. I'd say that, like in Europe and in Asia, for example, what I would tell you is there's always a question of why. If you came to me and said, hey, we want to raise capital for a venture in Indonesia in the US, I'd say there's probably some real reason why that makes sense. If you want to do it for a venture in Europe or in India, it is a little more challenging. The reason being, there are vibrant funding economies now well developed in India and Europe. And so at least till much later, unless you need to get to like very, very large raises, I'm talking like the Oyo and Ola type raises that you need to go. It's less clear to me that you should go abroad. And in fact, every time I see a company from India or someplace else that I look at as a potential investment, the first question I ask myself is, why am I looking at it? Like, if this was a great opportunity, there's so many investors in India that will probably be looking at it, and I won't even get to see it because I'm sitting all the way over here. So in a lot of ways, that it's there should be a real reason why you go into the US, because if you don't have a very clear reason why, it probably is generally a bad idea, meaning that you will have investors closer to you that'll be more helpful, that'll probably understand your market much better and can evaluate and invest in your startup in a lot better ways than others. There was another question around deep tech startups in India versus the US and scaling from India to the US, which is interesting. Now, this is an area that I'm actually very interested in, because I actually think it's a trend line that is likely to grow and actually maybe become even the norm over time. So India, most startups in this first phase have mostly been replications of something that's being done in the US. Even the largest things that have happened in India seem like they're in that realm of taking something that's happening in the US and replicating in India. But that's perfectly fine. Like, if you really think about, manufacturing back in the old days when, things were invented in the US and Japan then started to kind of build those things out. Eventually, after building those things for many years, Japan ended up being the source of all the innovation on the electronic side. And that's the kind of thing that I expect to see happen in startups as well through that evolution curve. So I do expect to see a lot more innovation that's starting to happen in India. The key question is talent really focused on deep tech at all in India? Probably today, not as much, or at least I haven't heard a lot of deep tech being invested in India. But I actually expect that there will be that. It will happen as more and more really well-trained staff actually start to focus on those kinds of things in India. Now, the construct of deep tech or not, building companies in India that scale for the global markets is very interesting to me, because once you know how to build the startups and there's an infrastructure to support you to kind of grow these startups in the Indian market, which is starting to happen very well right now, I do see a real opportunity for companies to get started and say, well, I'm actually going to build software that actually is going to serve the US market. And there's a couple of examples. I don't remember all the names now, but there's one accounting software in Hyderabad and some payment software, I think, in Madras that have basically been created to do stuff like that. So I do think that there are some interesting things that are happening, that there's some initial, what I'll call trial balloons that are starting to happen in that realm. But I actually think that'll be a big trend over the next 10 to 20 years that'll be quite interesting to see. So I think the other question was around the innovation rates across the rest of the US. Now that's an interesting area. The Silicon Valley, if you look at our own firm and how we actually plot our geographic distribution of investments and how we actually invested in different places, which is interesting that, as you kind of think about the distribution at our own fund, it used to be probably 90% Silicon Valley and maybe 5 or 10% across the rest of the country in the US. The specific question was around Boston. Boston, by the way, used to be the second biggest market in the old days outside of Silicon Valley for innovation, probably because of MIT and Harvard and all the other stuff out there. I would say that Boston is no longer the second biggest hub of innovation today. If I were to pick the second biggest hub of innovation today, I would probably pick either Seattle or New York. And And I would say it was more definitely New York before, but more recently, I'm starting to feel like it might be Seattle more than even New York. And so, so there is, I think, still what I'll call concentration and innovation in geographies, but those concentration geographies is spreading out. So you could start companies in Boston, you could start companies in New York, you could start companies in Seattle. But if you really want to be successful, I'd say Silicon Valley is still the best place to start a company. So if I were a company even up in Seattle today, I would say that if you just want to make it easier on yourself, move to Silicon Valley and start the company here. Even if you're in New York, I tell you the same thing. But you can still start companies in all these places. And if you do a phenomenal job, you will be able to attract funding in some of those places. In fact, there's a fantastic company that's being started and being grown out of Austin, Texas, and which, by the way, actually has quite a few companies that are actually starting to grow up in Austin, Texas. And Atlanta is another place where there's a lot of stuff that's happening in fintech. So I do think that there's a lot of stuff that's happening, but in general, I'd say Silicon Valley is the easiest place to get a company started and to grow it. Seattle would probably be my next best option, followed by New York. It's actually a little bit of a toss-up between New York and San Francisco, to be honest, because I think, New York and Seattle, because I think talent is better in Seattle, capital is probably better in New York. And so it's a little bit of a toss-up there. So there was a question around there's a bunch of questions around AI. One around the services companies in AI, and the second around ethical questions in AI. So services companies in AI, by the way, I think are, by the way, we just sold one of our companies that's somewhat in that services business, which is a company called Crowdflower, which was kind of like a mechanical Turk for AI stuff. So we did do stuff like that. And we believe it's a very core component of the growth of AI. And so I do think companies that actually enable this construct of services to enable the betterment of these models, because AI is a lot about training, and so I do think there's going to be a lot of stuff that's going to happen there. How long that'll be necessary or it'll last is harder for me to tell, but it's probably here to stay for at least the next 5-10 years, I'd say. Now, as these technologies around unsupervised algorithms start to get better and better, I do think those kinds of companies will start to find it harder and harder. So I wouldn't build a career in that area or build a startup for the long run in that area. But I do think in the early days, these are very important elements of how you build AI companies. The second area around ethics is very fascinating. And to be honest, is very underexplored. There's not enough work that's been done to think about the ethical aspects of AI, and not just the ethical aspects of AI, but what I'll call even the biases that AI builds. So there are the data that we train these models off of could have inherent biases in them. So for example, you might find by training a loan approval algorithm, as an example, with all the loan approvals that have been ever done, might in fact reflect a bias against African Americans, as an example. And there could be the fact that human beings for the last 50 years have, not because they wanted to, but very involuntarily or without awareness, were in fact biased against a certain segment or a sector or a certain kind of person, and so on and so forth. Now you train a model off of that data, that model is going to have the same inherent bias. And so now you're going to systematize or memorialize our human biases into a machine that we now expect is actually going to make some of these decisions for us in an unbiased way. It's not really unbiased. It actually just is just as biased as the training data. And so there are some fundamental constructs like that that need to be really thought through and solved for as we kind of think through how we kind of deploy AI for critical decisioning. There is, for example, an effort in the San Francisco court system to get rid of bail. And so you can't pay to go on bail. Instead, an AI-driven algorithm is going to decide what your risk of flight is and will decide whether or not you get bail. So you apply, and then the machine will tell you whether or not you get bail. Now, it's interesting because it sounds like a better option than the rich people get to get bail and the poor people don't get, because you have to take a bail bond or something else. So at the surface, it might sound like a great idea, but you have to really think through the second and tertiary aspects of this to say, what exactly is this going to look at? Is this going to look at how are you going to decide these kinds of things? Are these things ultimately going to kind of end up with a similar kind of bias where the rich people actually get away and the poor people don't? In which case you're not moving anything forward, except you're kind of feeling a little bit better than that, right? So those are the kinds of areas that I think are very interesting questions, and I don't believe we've actually solved that or have any real true element to these solutions. There's a question on Theranos, which is interesting. I think, look, Theranos had a lot of things going for it. I think fundamentally there is a certain level of hero worship in Silicon Valley, and so that enables these kinds of stories to end up happening. But I will say, and by the way, there have been multiple such solutions at much less grand of a scale than what happened at Theranos that happened and continue to happen all day. Because as investors, we tend to almost only have a couple of years, a couple of months, at best, and in some cases a couple of weeks to actually evaluate an investment. So there's no way you can truly kind of understand all the depth of the stuff that needs to happen in order to kind of make those decisions. Most importantly, we're making bets in most cases on things to come. So it is not that we don't invest in companies that already have all their stuff together. If we did that, we wouldn't be venture capital, we would be the public markets. So when we do venture capital, we're primarily investing in things that we believe will happen. And we're wrong a lot of the time. And when that happens more because of fraud than because of technology risk or market risk or something else, that looks much worse. But it happens. It happens because we weren't able to vet the people as well as we should have. And in some cases, these people can be pretty strong at doing what they do, and so we wouldn't have been able to ever really vet these people to do what they did. And in that particular case, I'd say that the number of Silicon Valley investors that were involved in that company was very small. The kinds of people around those company were like Bill Clinton and George Shultz and people that really didn't know anything about either venture or biotechnology. So I think that's a interesting but very sad outcome. But I don't think that that's the norm. But I do think that there are a number of stories where founders have run away with money and so on and so forth that has happened. But it's the exception rather than the rule. In biotech itself, I would say it's interesting. This biotech itself, I'd say, is somewhat out of favor. But I will say that the amount of capital needed to truly create innovations there is so large that it takes a lot of what I'll call background of the entrepreneur itself that people can bet on to say, this is the person that's going to crack this code. And so we're going to spend a lot of money trying to get this person, give the person this runway to kind of make this thing work. So I would think it's a very, it's a hard bet, I think, to make to look at biotech stuff. But it happens all the time, but primarily most of the dollars are flowing towards what I call these superstar entrepreneurs that are, phenomenal forces of nature in their area. There's one around entrepreneurship after college, which is a very, it's a great question. And I will tell you that, I'll tell you two things. I basically started my first company literally a year after college. So I barely worked for a year before I actually started my first company. And I have a interesting theory about it. What I think is right after college is actually like the best time to be able to start a company for a couple of reasons. One is you don't have any commitments. You don't have to make a certain amount of money every month in order to pay a mortgage or put your kids through school or do anything else that you need to kind of do when you're a little bit older in life, where you have some baseline expenses that need to be met. So right out of college, you can actually take big risks and spend lots of your time and not have a lot of expectation of return, which is a great time to take big risk times around entrepreneurship. However, you're also the least equipped to do it because you don't know jack shit about anything. And so fundamentally, jumping into something like this means that you're actually going to have to learn a lot of stuff on your dime, meaning that you're going to be spending all of your risk capital, time capital, or sweat equity on learning a lot of lessons on how to build a company and how to make it successful. So what I would give you as advice is, if you're doing something straight out of college, it's a great time to do it. Make sure you have a very, very experienced co-founder that can help you navigate and learn very, very quickly. And so that's what I would tell you. The second thing I tell you is, another way to learn on someone else's dime is to join a very early stage startup, not as the founder, but as an employee. So you're not taking as much of the risk. So you're getting paid, you're going to do all this other stuff, but you actually, the smaller the company, the bigger your role is going to be and the more you're going to learn. And then when you go out to start to do something on your own, you're probably going to be in great shape. So I know that's probably not like a firm answer either way or one way or the other, but I do think it's a good idea to look at entrepreneurship or high risk stuff very early on, but you should just make sure you're picking it in the right way. So I think the other question was around deep tech innovation requiring funding beyond the VCs. I think that's part of the reason why, to be honest, a lot of the true fundamental research right now is still happening at the very large corporates that can put $1 billion aside to go do a bunch of work on it. So whether it is quantum computing or whether it is, even AI for that matter, a lot of the innovation is still happening at the large organizations rather than startups. The other place where it happens is in government-funded institutions, which is primarily in academia. So universities are another big area where deep tech innovation is happening, because you have very, very deep-pocketed funders, either a very large corporate or the government of a country that's driving a lot of those kinds of funding. So I personally, as a VC, try not to kind of take on that level of risk. I'm willing to take on technology risk and for example, trying to find, if somebody's trying to build a digital clone of some system in order to model it better, that may or may not be possible to do. Though that's the kind of risk that a venture capitalist can take. But trying to figure out an algorithm that actually truly figures out true unsupervised learning algorithms is not something that I want to take on, because that could take 10 years, and it's best probably done in a organization that can keep it funded for 10 years and not expect any results. So then there's questions around data centers in US versus Asia. I don't really know what the base of the question is, but I'd say that generally data centers in general, I think is a horrible idea right now, just because there's enough compression of margins, meaning it's so hard to make money in kind of running those kinds of facilities that it's not a venture opportunity. It's definitely not a place where you can actually create large value. But if you have a lot of capital and you're looking for return on capital, so if you're a farmer and want to get into tech and you have $1 million sitting or $100 million sitting in the bank that you'd like to get, 4% or 5% return on, then starting a data center might be a good way to do it, to create cash flows off of a big capital base. But otherwise, it's harder to kind of look at data centers. The big buyer of data centers today will probably likely be someone like an Amazon that just buy your data center or lease it and resell it on a per VM basis. So I think it's uninteresting is probably what I'd say. language processing is another area that there was a question on. I'd say the language processing is actually one of the areas of AI. There are two areas of AI I think that are actually truly getting to the point where you could start using them in commercial applications. One is image recognition, and the second is language processing. So those are the two areas where I think the data sets are large enough and the models are well trained enough in order to really create models that could truly be applicable in a commercial sense. So Google is probably the farthest ahead on both of those things, I think, primarily because they, again, have the best annotated data sets off of anybody else in the world. So they created this Google Books initiative that actually gave them a big leg up. They have Gmail, which actually gave them a big leg up in conversational type stuff. And then they had Google Photos, which basically is an area where they have, again, a lot of annotated data sets. So those are the areas I believe are farthest along in actually creating models that are truly usable in commercial applications. So by that said, by no means are either of those solved problems. I'd say that they're probably the farthest along. So in language processing, for example, the one area that we've seen a lot of lack of products or services, if you may, is in verticalized applications. So in non-vertical, broad-based, what I'll call language, Google's actually done a pretty good job of recognition, responses. I don't know if you guys have used those Gmail auto responses and everything else. They've done some interesting stuff to be able to understand the intents and so on and so forth of conversational stuff. But if you want to put some of that language processing into a doctor's office, for example, that doesn't work quite as well if you just use the core Google APIs, because there's a lot of verticalized knowledge there that needs to be taught. If you want to put that into a contract negotiation discussion, that doesn't work as well either, because again, there's verticalized knowledge and context that I don't think the models are quite well trained on. So I'd say that generally there is a good amount of progress, but still long ways to go before something actually works out here. There's also a question around healthcare. Well, I just started to talk about that, which is AI for healthcare. I'd say that I don't think AI is quite there to do stuff for healthcare. And again, what I would say is the places where there's a lot of work, by the way, going on. So for example, there are people that are trying to use AI to identify insurance fraud, right? Which is looking at x-rays, and there's actually a human being usually that looks for x-rays. Typically, they only look at them when the claim is very large, and to make sure that the claim is actually accurate and that the x-ray actually shows what it is that the person is claiming or the doctor is claiming, and so on and so forth. But if you could actually look at every x-ray to figure out if there's in fact a problem, then you would actually bring insurance fraud down to the lowest levels. So there are companies that are trying to do stuff like that, or stuff that are actually trying to diagnose cancer by looking at MRIs or other kinds of systems. I can't say any of these things is truly at the scale where this thing works so well that it can be put into practice and actually start putting people's lives at stake. So what's more likely to happen is some of these things actually become decision support tools to see if it's almost like a second opinion, if you may, that the doctors can actually look at, or an insurance processor can actually look at to kind of see if this is interesting. And then eventually, over the next 10 years, they will have learned enough to try and make those kinds of things become a little bit more useful. The question also asked about IBM Watson. I would say IBM Watson, if anything, has been a big boon to startups in that they did a lot of hype. They sold a big vision. They have not been able to deliver on almost any of it. And so I have met at least 20 different startups that have all been in this situation where they actually went in because somebody was sold a big vision on Watson, and now the manager needs to deliver a value, and now has to actually find a real solution, and they haven't found a real solution yet. And so the startup actually ends up winning the actual contract because they actually can solve the real problem. So in a lot of ways, I think Watson, if anything, is not really a threat to most startups. It's actually only helping them. So I think we're almost out of time. But Krishnan, can I take one more question, or are we done?
Schwark, can you hear me?
Yeah.
Yeah, I think there's one last question. If you can address that, and then I think you'd be, we'd be mindful of the time.
Got it. All right. So the question that I'll take is around how do we evaluate the team starting for looking for funding? So when we see a team, what do we look for in the early stages? The core thing we're looking for is what I'll call founder market fit, which is, why is this person really going to win this particular market? So it's not about whether you're good or bad. It's about, are you the person that's going to revolutionize this particular area? Do you have do you have some clear insights that nobody else is likely to have? Do you have a certain kind of level of execution? Do you have a network? Do you have a team? Do you have something? Why are you going to be the one that's going to revolutionize that space is one thing. The second thing we look at is complementarity. Do you as a founder are self-aware enough to know what you're really good at and what you're really not good at? And are you surrounding yourself with co-founders that actually are perfect complements to you? And on that second thing is probably where we see the least amount of complementarity. People tend to kind of just work with other people like them, that'll agree with them. What you really need is people that are almost a complete opposite of who you are from a skill set standpoint. So that's kind of like one of the things that is something we already look at. So with that, thank you very much for sitting through this, and hopefully this was helpful and useful.
Schwark, thank you so much for your time today. I think we all enjoyed this session a lot. Very, very useful insights, and I'm sure all the youngsters in the crowd here will be enthused enough to take the big risks now, just after college. Thank you.
That's awesome. Very good to hear, and see you guys. Bye.
Bye-bye.